Hello, everyone. It's Tesharra Alexander, your trusted realtor with Maximum One Realty, and I am so excited to present to you guys another awesome interview for my channel, Moving to Marietta. We have been talking about what it's like to purchase during a pandemic. And I don't know if you guys got a chance to catch my last video with Lee Bell, but it was concerning lending during a pandemic. Today, we're going to talk about financial responsibility, the things that we need to do with the money that we have to ensure that we're in the best purchasing power possible. So I'm so super excited to be here. As you guys know, I'm your trusted realtor, and it is my goal to ensure that every person who approaches me has the best opportunity to own a home. And what I have noticed is that a lot of people come to me and they don't have the funding, or they don't quite know what to do to get that money. So I wanted to bring on a professional to help you know the proper way to manage your money so that you can be prepared when it's time to buy. I love to practice what I preach. So the young lady you're going to hear from today has actually helped my husband and I. That's right. She's our financial counselor, and she's actually talked to us about what we need to do with the extra money that we have coming in and where to place it. So that is why she is here today, guys, and you are in for a treat. So I have with me today the lovely Donreal Walton, and she is going to introduce herself right now. Donreal.
Thanks, Tesharra. What a great introduction. I don't know if I need to do my bio. You brought me in good. So I'll just briefly, touch on a couple points here. Just a little bit about me. Like Tesharra said, my name is Donreal Walton, and I am a licensed financial representative. So I reside in Atlanta currently. I've been here for 7 years. I was born and raised in the heart of the Mississippi Delta in Greenville, Mississippi. And I've been in financial services now for the past 3 years. So I'm a member of FINRA. I hold the following investment licenses. I have a Series 6, a Series 63, as well as a Series 26 that allows me to service my clients fully on the investment side. And I'm licensed in Georgia, Mississippi, Alabama, Texas, Illinois, North Carolina, with many more states coming, in addition to, me being a financial literacy advocate. So that's my full bio.
Awesome. Yes, guys, she is amazing. As you all know, I always try to bring you the best. I have a lot of people reaching out to me, wanting to share with my clients, but I always want to make sure that you guys have the most accurate information, and Donreal delivers every time. Like I said, we use her personally, so it's not just something we found online, but she is amazing. So thank you for that, Donreal. Your credentials, that's very important to people. So guys, we're just gonna have a conversation, Donreal and I'm gonna pose a few questions to her that I think would be beneficial to you guys. If at the end of this video you feel like your question was not answered, her information will be in the description box, so you guys can contact her for further information. But here are some of the questions that I think you guys will like. Okay, so Donreal, question number one, what is the best way to invest extra money?
Okay, I'm so glad you asked. And I think what's important as I share my screen here, number one is definitely you have to pay yourself first. So when you talk about investing extra money, really the question then is, okay, what do we want to do with this money? And that brings up the 3 fundamental accounts that you want to have established as far as your saving programs go in order to have a complete savings programs, right? So you've got your emergency fund, you've got short-term savings and long-term savings meant for things like retiring or investing long-term. And so what do these look like? Just to break them down, if you do have some extra money to invest, kind of think about what you're looking to build and what your goals are, right? So for your emergency account, that would be for you guys to build up 3 months of income for emergencies, just in case anything were to happen and you want to have some cash on hand. Or if you've got a major car repair, we know those come up unexpectedly all the time. If you're looking to remodel the house, you've got some medical expenses. You just basically need an account to cover ease of access. So you got some liquid cash. That would be great. And usually we allocate that to a vehicle called a money market fund, right? Where your funds sit in cash. That way you've got access to them. And then the next type of account you would want to invest in if you've got some extra money will be a short-term account, right? We're talking about purchasing a home. That will be a good place to save for that. You probably will get a better rate of return, more than likely than you would at your local bank. You know, in addition to saving for a home, maybe you're looking to shoot for 6 months worth of your income, or maybe anticipate a job loss within, you know, the recent pandemic. A lot of people have realized that, hey, if you don't have a backup plan, if you don't have those backup savings, it gets hard, right? Especially when you get furloughed unexpectedly, unfortunately. And we want to allocate those funds conservatively because you're going to need access to them in the short term. And last account will be some type of wealth building account. So maybe you're like, well, you know what, Donreal and Tesharra, I've got the first two, but what I'm not doing is saving for my retirement outside of work. So in that case, with your extra money, you want to invest into a wealth building account, right? Some type of retirement account that's got tax advantages, a Roth or a traditional IRA, really any tax deferred accounts. And we allocate those funds in growth funds during your growth years. Those are the years where you still have time to accumulate some money for retirement. And then we transition them into more income-based balance funds during the years where, you know, it'll be time for you to start taking a distribution from those accounts. So I hope that answered your question, Tesharra.
Absolutely, it sure did. And I was very impressed because this is a conversation my husband and I had with Danrielle about retirement, because we have some things, you know, in different places, but she was able to tell us about diversifying our portfolio. And we actually had an account that I sent it to her, she evaluated it, and she was like, no, you're not getting the biggest bang for that. So you need to take those funds and put them here. And that's important because a lot of us trust the companies and we have money that's been there for years, like this little account that I had, but why not make sure, you know, that it's getting the biggest bang for the buck? And that's what Donreal is amazing at. So thank you. I told her I want to retire rich. Did I not say that?
Yes.
I want to retire rich. So I was like, where do I need to put whatever little bit I have to make it grow? So I love it. Okay. So question number 2, how can someone grow their savings?
That's really good. How can you grow your savings? I think the first thing you need to be able to use is time and consistency. So we just discussed, okay, where do I put my money if I have extra to invest? Now that I know where to put it, how do I, you know, help it grow better? And so you don't just want to save, guys, you want to invest. And for that reason, getting a good rate of return is key. So I've just given you an example of a growth of a $10,000 investment just over a 30-year period. And we've got it allocated in 4 different vehicles, any of either you could invest into. But one, for instance, the first is being invested into the stock market, is growing at a 10% average rate of return in this example. So that person's 10K became 210,000, right? Then they go down to bonds, they've got 6%. That growth is 63,000 over 30 years. Then obviously, as you can see, the trend here is the lower the rate of return, the lower the savings amount at the end of that 30-year period, right? You just want to think about your goals and what kind of rate of return do you need to reach your goals? And the answer is probably the best one that you can get. And, you know, lastly, when you talk about growing your money, well, you want to be educated on how long it's going to take your money to double, because that's important. And so one thing I educate my clients on is the rule of 72, which is essentially the number of years it'll take for your money to double, right? So all you do is just take 72 and divide that by whatever current interest rate you're getting, wherever you're saving your money, and that'll tell you how long it takes it to double. And so here, as an example, at a 4% interest rate, that person's money is going to double every 18 years. At a 6% rate every 12, and at a 12% interest rate every 6 years, right? We don't have a lot of doubling periods in our life. That's why it's important to get a really good rate of return and be educated on, okay, how long will it take my money to double, so that you can use that time more efficiently and so you can be consistent with your investments.
Amazing. And I tell you guys, those of you who are following my channel, you know that I have 21 years in education. And so that's one thing that I think it makes me successful as a realtor is the ability to teach people the process. That's one of the things I loved about Donreal as well, was that she knows how to teach and explain. No question is too dumb. She didn't make me feel like you don't know that, you know. So because I was asking questions and my husband was like, okay, can you run that again? And so we really, and she was so patient. She had a smile. She never made us feel like, oh, you should know. So just like she just broke that down, she didn't assume that you guys as the watchers knew anything. And so it's really worth, guys, giving her a call just to see if you're on the right track. That's important, because the last thing you want to do is to get to retirement and then your savings isn't enough, or what you've invested from your job isn't enough. And that was our fear, especially I think all of us in 2020, we've had a wake up call. And so that's why I'm trying to get as much information out to the people, because when you are informed, you can make better decisions for you and your family. So thank you so much. I love the way she just taught that. You know, I'm a teacher at heart, so I like to be around people who don't mind teaching others. So thank you for that lesson.
Of course.
Next question. What is the quickest way to save for a down payment on a house? You know, my people come to me and they go to my trusted lenders, and then the lender says, oh, you're going to need this cash, you know, because not everyone can get a 100% down payment. They need some cash. If someone is in that position, and I always tell people, start early, saving and preparing and knowing what number you need to bring to the table, what would you say to a person who wants to get a home, let's say in the next 6 to 12 months?
That's a really good question, and it's multifaceted, you know, but essentially the most important thing, obviously you want to work on, is becoming an owner and not a loaner. That's a part of the reason a lot of people want to purchase a home. I'm not a real estate agent, but I know you're not really gaining anything in terms of ownership, equity, like right when you rent out in an apartment. So you want to be in a position to where you have something that's got your last name attached to it and you own it. You want to do the same with your funds, right? So the fastest way to create a down payment or purchase a home, I would say, is to pay yourself first. So that follows into the examples that we covered earlier. You need to save, right? One of the fastest ways to accumulate savings is to contribute to your savings, right? And so I'd also say adjust your priorities. When you're looking to purchase a home or make any big purchase that requires a lump sum amount of money, there are going to be some sacrifices that you'll need to make. So maybe you can't go to Starbucks every morning. Maybe you just buy the Keurig and you make coffee at home every day and you save, because that money adds up. Or maybe you don't go out to eat every weekend, or maybe you stay in and you cook more. I've had some clients that were saying, hey, you know what, we're going to move back in with our parents. If you have that type of situation, right, don't be ashamed of the adjustments that you need to make in order to put yourself in a better position to set your family up for success, right? I also encourage future buyers to change their thinking, because a lot of times we spend our money freely. And it's easy. I remember, when I didn't have any responsibilities, when I lived with my parents, I spent a lot more money during that time period, because I was like, I don't have any bills. I didn't have a car note. Life is great. But, when I got my own place and when I started having some real people to pay money to, I had to adjust my thinking. I couldn't go out with my friends every weekend. I had to say, you know what, I can't make it to brunch because I just bought groceries yesterday, right? So you got to change your thinking, and, that goes into adjusting your lifestyle, guys. So when we get, these funds from things like the stimulus package that the government has given, or even, tax season's getting ready to come up, right? Do the kids need 5 new pairs of Jordans, right? Or
Look.
I'm just saying.
That's the one.
But I've noticed, right? Or would they prefer to finally have, their own bedroom, right? And, that goes into us taking responsibility and saying, you know what, I'm going to take this full $5,000 and save it, right? That may not be realistic. You may need some of it for necessities, but just think about your future self, because that version of you is going to thank you for the sacrifices you're making today. And, it may not hurt to earn some additional income. A lot of us sometimes, we like our freedom, but, real freedom, as I've learned from one of my really good mentors, does not come from doing what you want. Real freedom comes from being disciplined, right? And so when you're disciplined and you can commit, I remember when I was growing up, my mom was an educator full-time. She took up a part-time job, and I think it was Belk in the mall, right? So basically she was gone all day because she knew that she wanted to put us in a particular neighborhood. She wanted to put us in a particular house. So when she left the schoolhouse every day, she went to the mall to work. We didn't see our mom till 8, 9 o'clock, but that was a sacrifice that I'm glad she made because it helped improve and elevate our quality of life. Right. So earn additional income, find a side gig. People are doing that. Avoid the credit trap. Stop debt financing things that you don't need. Right. Okay. You've got a Toyota that's paid in full. Maybe you do have the credit score to go get the Benz. Do you need it? Right. Would the kids prefer, like I said, to maybe change neighborhoods? So just avoid just the revolving debt cycle that you can get into, and you want to set goals and have a plan. So I think if you can do all of these things, in the order that makes sense for you, that'll be one of the fastest ways you can accumulate money to buy that house. Paying yourself first, adjusting your lifestyle, making sacrifices, earning extra money. Because really what builds your savings fast is having more money to put into it, right? And so all of these adjustments will hopefully help buyers make that adjustment. And I hope that thoroughly answers that question.
Girl, I'm sitting here trying not to jump up and yell, preach, amen. Oh my gosh, that was amazing. And it sounds simple, but people really struggle with deciding where to place money at certain times in life. And just a little, true story for me, when you said that, we just moved. Everyone knows I did a whole series on us moving into our brand new home, so that's no secret. But we just did that a few months ago. And a couple of months before we were getting ready to close on our home, my husband's vehicle went out. He had a nice truck that he loved, and it went out. Now, as a man, he could have said, well, I have to go get me a new truck. That's what I have to have. But I admire him so much. He had some money saved. He went and paid for a car cash. And it was a little bitty car. It was a little bitty car. But he drove that car, paid in full, because he did not want to jeopardize what we needed to do financially for our home. So that I really respect him as the head of our household for making that decision. And we just moved here, and he just bought him a really nice F-150 that I'm proud of, but it was in due season and not just to put us in a bind or for the lenders to say, so you have to wait. I love what Donreal said. Don't be ashamed to sacrifice, sacrifice where you have to now so you can enjoy it later. So amazing information. Thank you so much for that. Next question. Why should everyone have life insurance?
This is my favorite. Just because, yes, life insurance is the gateway to number one, generational wealth, right? You want to buy the right kind of life insurance, but let's talk about why it's important, because I don't think a lot of people look at life insurance from this vantage point. Right. So, I'm going to ask you guys this question, and it's rhetorical, of course, because you aren't here live with us. But if you had a toaster in your kitchen and on the 1st and 15th of every month, $2,000 popped out, would you like that kind of toaster? Of course you would, right? Would you want insured? I know I put insurance on that toaster. It's not getting sit next to the sink. We're not putting this toaster in any kind of danger because it's popping out $4,000 every month, right? But unfortunately, there is no such toaster. But you guys, you're the money machine for your family. So if it makes sense to insure an imaginary toaster, wouldn't it make sense to insure your income? And so that's the way we need to think about life insurance. It's income protection, right? It's not burial. It's a really good way to, inject a large sum of money into a family when someone passes. But outside of that, what happens when the bills are the price that they are every month and the expenses? Now you're gone and your wife or your husband has only got half the income coming in. So when you've got life insurance, that gives your family the ability to continue to live their life. They're going to be grieving, right? And when you add on financial struggles, it's just, sometimes it can, well, all the time, it can be devastating. Life insurance is the last love letter that you leave to your family, for sure. Now, since we know life insurance is meant to serve as income protection, right? What is the importance of having personal life insurance outside of work? Because I hear a lot of individuals say, well, I have it on my job. And, I always respond by saying, hey, group insurance is not enough coverage. We just talked about life insurance being income replacement. The job, barely want to give you what you have now, right? So do we trust them to take care of our loved ones, upon our demise? No, not really, right? So you want to make sure that you've got personal life insurance in place to meet your full need, right? Statistically, Americans are drastically underinsured, typically about needing an additional $400,000 to $500,000 in addition to what they have. Second, you do not own your work policy. A lot of people say, well, I've got, insurance on the job, but you don't have a master copy of it. You don't really have access to it because you're just the insured. Your job owns it, right? And also, you cannot take that coverage with you when you separate from service. So that's why, you hear a lot of people say, well, I just left my job. Now I need some insurance. Sometimes it gives you the ability to convert it, but it's typically way more expensive than it was priced while you were an employee. And, outside of all of those things, I think ownership is important, right? Just like you want to buy a home and, we've got our cars insured, our cell phones insured. We need to insure our life. We need to make sure that there won't be a huge question mark as to will the family be able to survive, right, if something happens to you. So really, how can you not afford to insure your life? So, yeah.
Awesome. And we really have to get over this notion of, when I'm gone, I'm taking it all with me, and this is and that. And she mentioned generational wealth. And I love the concept. I've never heard it that way, of leaving this the final love letter. It is saying to your family that I am leaving you this for you to have better and do better. That was very important to us as well. And my husband and I have sat down with Donreal to talk about Darian's future and Christopher's future. And we put a lot into our kids, but we also want them to do better than we've done. Okay. And if nothing was left to you, from your family or what have you, you can be the one to start it. I always say, just because you don't see it doesn't mean you can't start it. So you can say, what? I want my kids to have better than I have. I don't care how much I acquire on this earth. I want my kids to have more and better. So I think that's a great conversation to have with her. And I think that is very important because we've just had that conversation in adjusting. You have to adjust it sometimes too as time changes. So thank you, Danrielle. We could talk all day, but I think that is enough to get people thinking. I think that was wonderful information. No one could have done this better than you. And I appreciate you taking the time to talk to my clients and future followers. So I really appreciate you.
Of course. Thank you for having me here. If you have individuals that have additional questions, I know you're going to plug me at the end.
Absolutely.
But, just in terms of what my practice focuses on, it's just making sure that, families can reach true financial independence. We want to help you get to the point where you've got so much money saved that you don't even need a life insurance policy because you're self-insured, right? We want to help you plan for your goals. We want to make sure that you can come to us and you can feel like you're at a one-stop shop because you know what? We can take care of all your needs, right? And I love to have the opportunity to answer additional questions. I also offer a complimentary financial needs analysis for individuals who want to get an idea of where they stand, where they need to be upon retirement if they want to live comfortably, right? And whether they're on track or not for that, and what I recommend that we do specifically to help them get on track. So that is a service I provide as well.
Amazing. And most people call me first, your realtor, because you're ready to buy a home. But I think you all can see the value in maybe talking to Donreal first and making sure finances are in order. And then by the time you come to your trusted realtor, it's a wrap. Like, we're going to go get that dream home. It's done. So doing things in order, that's Bible, that's in order. So thank you guys for tuning in. It's Tesharra Alexander, your trusted realtor with Maximum One Realty. Do not forget to subscribe to this channel. It's moving to Marietta. Go back and watch my previous videos, and we have some great information coming in the future. So I would love to have you as a new follower. You guys have a great rest of the day. Thank you for tuning in. Bye.